Hey, it's Mike. In today's video, I want to talk about how to set a profit target on investments because this is one of the things that really challenged me when I started investing because I started investing in the late 90s and it was very easy to find profitable trades because I got into investing because of the dot-com boom. But the problem is trying to figure out when to take your profit, which I had no idea. All I knew was that all these dot-com stocks were going up really fast and I should jump in, and I jumped in. And you've seen a lot of that now with, let's say, cryptocurrency and Bitcoin. It's like you can jump in, make a profit right away, but when do you get out? So I just wanted to give you just sort of maybe idea starters on when you should take profit on your investments. And what I want to do is I want to target 4 different approaches that I use. And the profit approaches that I use is a short-term, intermediate term, long term, and super long term. And that helps me have some discipline and put a very strict time that I'm going to get out of a stock, whether it be a price sensitive or date sensitive profit target. So let me explain here. Okay, for short term, when I talk about short term trades, I'm talking about trades that last anywhere from 5 days to 1 month. Now, when I look at short term trades, I'm looking at stocks that are breaking out to new highs, new 52-week highs, or new all time highs, but usually 52-week highs. And you choose 52-week highs because you get a lot of programmed buying when a stock hits a new 52-week high. Or look at to break above a key resistance level. So, for instance, with penny stocks, it's the $5 share level or the $2 share level. And that will set a specific time or price to get out. Now, usually, if I look at a stock that I'm going to buy when it breaks out to a 52-week high, I'm going to target a 5% exit with 5% profit when it hits an all-time high or 52-week high, or 3 trading days, because usually I notice that the buying usually dies out after 3 trading days. So that's what I look at for like a 52-week high. If I'm looking at, let's say, a stock that breaks above $5 a level, I've set a profit target of $7 a share. I usually about 1 month. If after 1 month the stock has broken out from $5 a share and hasn't hit $7, I'll just take profit on it. But usually that's how I target short term. I love playing the 52-week high because you tend to get a lot of selling, especially in a bull market. And I just try to take, like I said, a 5% profit target, or I just exit the trade after 3 trading days. Now, for intermediate term, I look at seasonality. Now, seasonality is something that's pretty powerful. It doesn't work all the time, but it works a lot of the time. And what I do is I'll get into the trade at the beginning of the seasonally strong time for that sector and then get out when the seasonally strong times end. So, for example, I have some trades in for the energy, including oil and some energy stocks. And the seasonally strong time for energy is the months of February, March, April, and May. So I got in at the first trading day of February, and I'm going to get out at the last trading day of May. Another example is the Santa Claus Tech Rally. And the Santa Claus Tech Rally usually starts in the first trading day of November and ends at the last trading day of December. So that's another seasonality play. And I just enter like the NASDAQ, in November, then exit at the end of the year. Now, for long-term trades, I'm looking for a sector or the entire market that's just in a bull market. And what I target is usually a 1 to 2 year hold. And I usually sell at the end of the 1 to 2 year hold, or if the sector doubles its typical performance during that time. So here's an example. During a bull market, NASDAQ will typically return about 15% a year. So if I enter a trade on the NASDAQ and it's up 30%, I'm just going to take my profit. Now, there have been years when NASDAQ goes up 40, 50% in the year, and I miss out on the rest of the returns. But you know what? There's a saying, you never go broke taking a profit. So, and then I could take that money and deploy it somewhere else. So that's kind of my approach. Is I just look at secular bull markets and I just, enter a trade there and I say, okay, this could be a long-term hold. Another reason why you might consider a long-term hold is that you pay less in capital gains tax versus short-term capital gains tax, which is when you trade in and out less than 12 months. And then finally, this is probably the most common that I use are the super long-term trades, because this is where you have the opportunity to make the most money. And this one is the most complicated, but you're just projecting a price target at a certain time. And I like to use a 10-year price target. Like I have a 10-year target on GameStop, which is $30 billion. And of course, GameStop became a meme stock, and I was able to sell out of that position a little early because it literally reached my 10-year goal in like 6 months. Now that typically does not happen, but the way you sort of look at these super long-term projections is look at a company that you think will be a big disruptor in business over the next decade. So, for instance, 3D printing, genomics, companies that you feel like they're going to be like the next Uber, you want to hold those for a real long time because you have to deal with the 80, 90% sometimes drawdowns. And so, you put in money that you're not going to worry about and just figure that in 10 years that this company will disrupt its industry. So I only sell if something has changed in the business model, like if the company's broken or something, or if a company comes within 20% of the projected target price in less than half the time. So like what happened with GameStop. So let's say you have a company that you buy into that's a $1 billion company, and you feel like this company is going to be worth $10 billion in 10 years, and after 5 years it's worth $8 billion. Well, you might as well just take your money off the table, because why hold a stock for the next 5 years to get that other 20% return? You've already made 8 times your money in 5 years. Might as well just take the money off the table. So this is my favorite super long term. It takes a lot of patience. It does take a little bit of analysis, but the great thing is it's less trading, and less trading means you're likely to make less mistakes. And also, it's actually kind of easy to find companies that are likely to be disruptive, because you see a lot of experts talking about it. And when you kind of research the company, it kind of makes sense, like 3D printing. It kind of makes sense. 3D printing is just going to make life easier for manufacturing. So you get into these little stocks like Nano Dimensions or um, the other 3D printing stocks, and you just hold on. And it sometimes requires a lot of patience, because, like I said, those stocks could have 80% drawdowns pretty easily. But you just hold on to them, and they will begin to sort of grow exponentially over time. You just have to have a little patience with them. So that's my thoughts on how I approach my profit targets. Like I said, I approach them in 4 different ways: short term, 5 days to 1 month; intermediate term, 1 month to 6 month; long term, 12 to 24 months; and then super long term, 5 to 10 years. So I hope this is valuable for you. I think this video will be valuable if you want to come back to it now and then, just to see if you're trying to figure out how to set a profit target. I think this information will be helpful. Okay, so I hope you enjoyed this video. If you did, be sure to leave a like and go ahead and subscribe and turn on notifications. I do multiple daily updates on stocks, stock trading strategies, and market updates. Thanks a lot. Bye.